The year is 2026. Gold has shattered all-time highs. The cost of living is strangling the middle class, and the central banks tell you everything is under control. But look at your bank account. Look at the prices. Does it feel under control? Or does it feel like you are running on a treadmill that keeps getting faster? Welcome to Econ and Finance Reality. We don't sell dreams here. We analyze the math. Today, we are going to expose the biggest lie in modern history and show you the only way out. Let's talk about the theft of your time. Most people think inflation is just prices going up. You go to the grocery store and milk costs more, gas costs more. You blame the supply chain or the war or the greedy corporations. But that is a lie. Inflation is not about prices going up. It is about the value of your money going down. Imagine your life energy is an ice cube. You work hard to freeze that energy into savings. But the financial system is designed to act like the sun. Every single day your ice cube melts. This is not an accident. It is a feature of the system. To understand why, we have to look back at 1971. Before that year, the dollar was anchored to gold. The government had a leash. They couldn't just print money out of thin air to fund wars or buy votes. They had to dig gold out of the ground first. But in 1971, that anchor was cut. The dollar became a fiat currency, backed by absolutely nothing but faith. Since then, the money supply has exploded vertically. The dam broke, and the flood of cheap cash is drowning the middle class. There is a concept in economics called the Cantillon effect. It explains why printing money creates a gap between the rich and the poor. Imagine money is like water pouring from the top of a champagne tower. The people at the top, the government, the big banks, and the corporations get the fresh money first. They buy assets like houses and stocks before prices go up. By the time that money flows down to you, the employee, the saver, prices have already doubled. You are not just dealing with inflation. You are the victim of a wealth transfer mechanism. The system steals purchasing power from the bottom to bail out the top. So, traditionally, people ran to gold. Gold is heavy, it is shiny, it has been money for 5,000 years. And yes, gold is a great shield against inflation, but gold has a fatal flaw in the digital age. It has supply elasticity. What does that mean? It means that when the price of gold goes up to $3,000 or $5,000, human beings get greedy. We invest in massive machines. We dig deeper holes. We blast asteroids. We find more gold. The supply increases, which suppresses the price. Gold is scarce, but it is not absolutely scarce. We needed a better solution. We needed a vault that no government could open, and a supply that no miner could dilute. In 2009, the solution appeared. Bitcoin is the first engineered monetary network in human history. It solves the money printer problem with one simple rule: 21 million. That is the hard cap. There will never be 21 million and one. Critics say, but it's just computer code. Can't they just copy and paste it? No. Because Bitcoin is not just code. It is a wall of encrypted energy. It is defended by the most powerful computing network on Earth. To hack Bitcoin, you would need to generate more energy than a medium-sized country. It is a digital fortress protected by the laws of physics, not the laws of politicians. Now I know what you are thinking, but Bitcoin is too volatile. It crashes 50%. Yes, it is volatile. But you are confusing volatility with risk. Volatility is the price moving up and down in the short term. Risk is the permanent loss of purchasing power. Cash has zero volatility, it is a straight line. But that line is pointing straight down to zero. Cash is safely losing 5% to 10% of its value every single year. Bitcoin is like a turbulent flight that takes you to a better destination. Cash is a smooth ride on the Titanic. Which one would you rather be on? Stop thinking of Bitcoin as a stock ticker that goes up and down. Start thinking of it as digital real estate in Manhattan. The land is limited. They cannot print more land. But the population of the world, the demand, is growing every day. When unlimited money chases a limited asset, there is only one place the price can go: up forever. The smart money is already moving. Wall Street is here. The banks are here. They are exiting the melting ice cube. The only question left is, are you going to keep saving in a currency that is designed to lose value? Or are you going to secure your future in the immutable ledger? The choice is yours. Subscribe for more reality checks.